Hello traders, welcome to FreeFX. I'm Francesco. Today is Monday the 8th of August, actually just heading into the 9th of August, but it's the start of the week where on Wednesday we have the CPI update for US for the last month, and as I said in my last video on Friday, we don't really seem to have a lot of price action on the S&P 500 SPX this week, at least not today. And I don't think on Tuesday we'll have much action either, unless something happens that dramatically shifts that. So on my video on Friday, I was actually saying that there does seem to be some kind of concern for the way that this sort of this protracted lull in this index. We are meant to be, according to some, we're meant to be in a more volatile month, August, where there's a return to normality, kind of the end of the summer lull, and yet we seem to have this sort of position where the daily is showing these kind of dojis. We had 3 dojis in a row, and not sure what tomorrow, i.e. today, is going to bring, but I think certainly, as I said on Friday, there's plenty of room to the downside, if not also to the upside. And if I just kind of showed you going back that the last time we had this 3 dojis in a row, just kind of did a visual scan really of candles. I might have missed something, but it's very interesting to see that this drop in January of this year, so the start of the year, as you know, was the start of the official kind of bear trend, and the bear market is 20% from the highs, but you could see this sort of real big move here in January all the way into February. So you can see just here we've had these 1, 2 dojis at the end of December going to the last day of December, 30th and 31st, actually last 2 days. Now obviously that's to do with seasonal considerations, Christmas and such like. But certainly, we can take something from that, which is that the dojis then came in December after a last rally, which lasted a few days, and the rally before that was still part of the uptrend, so maybe not so significant, but certainly we have had something of note recently where we've had a rally and this kind of stall. And if you look back to this bear market rally from the middle of June, the biggest stall really has been, I think, without any sort of doubt, has been the current one, because it's been like 3 days now. So really, there should be something, more market moving than that. Hopefully, Wednesday will bring a resolution to this impasse. But I've really just decided today that I shouldn't really take up so many indicators, etc., because I've already talked about a few of them on Friday and sort of looked at the futures side, adding a few indicators there, having a look at RSI, and just trying to get a sense of what else we could look at. But I think when the market is so choppy and the trading range is so small, and as I said, the ATI has collapsed really to April levels, there's not really much else that you can surmise from or divine from looking at lots of indicators, because they will tell you the same thing essentially. So I don't really think it's worthwhile. What is worthwhile maybe having a quick look at, which I've done, is to see what the Euro USD, Euro dollar is actually doing. So I prepared this just to kind of show you. This is the daily chart. And now you may remember I was a sort of Forex enthusiast, and spent a lot of years training myself to be a profitable Forex trader. So I've learned quite a lot of things about currencies, and obviously I keep an eye on them every now and then because it's still relevant sometimes to know what is actually happening with the most liquid currencies. So for example, the Euro USD, last year we were at sort of 123. We've had this incredible run down, which kind of terminated in July. Now we kind of arrived at these levels, and as you can see, we've sort of stalled. We created a sort of wedge, if you like. Well, I mean, this is the line chart rather than the candle chart, but you can see there's a sort of wedge here, and then we haven't really made progress, which sort of resonates with what's happened to the S&P. We kind of bottomed, then we sort of rallied it a bit, and then we stalled at the end of a long bear trend. So what's interesting is that up until this point, 123 in 2021, the euro and the post-pandemic, the euro and the S&P were both in an uptrend, and then they've crossed paths, but they sort of aligned from January. Obviously, in January of this year has been a mutual bear trend, and of course this shows you how different themes can play into the same asset. For example, for Euro USD, the post-pandemic recovery was mainly fueled by money put in by the European Central Bank. And now we have the dollar strength that started with the S&P weakness, and also with the well, it's sort of a chicken and egg, which one came first, but the Federal Reserve raising rates this year obviously boosted the dollar and played down on stocks. So that's, a strong USD automatically is a weak euro. So that's kind of a simple one. But as you can see, there might have been other times where the dollar could have been strong, but the market wasn't really prepared to kind of back the dollar. So that's really also the dollar can be strong as a hedge, sort of when people go to cash as a kind of safe haven, or it can be strong because of rate rises from the Fed, and so it becomes a sort of vehicle of, for example, a carry trade, dollar yen, which has sort of advanced tremendously in the last few months. So I'll just hide that again because I just wanted to finish. So that was just to say that there's a lot that's happened because of the dollar strength. It's a big change in the exchange rate there from 123 to near parity. In fact, we arrived at parity, and also we have this kind of alignment between the index, the S&P, and the Euro USD, which is the kind of most liquid currency pair, FX pair in the world. The 1 hour is also showing us something else. The 1 hour, I was showing this the other day, this kind of triangle formation. And just if you missed that video, I'll just draw it again. Just 1 second. Very quick at this because I know exactly what it is. It's this triangle here. Okay, so that was the triangle formation that we had. And I seem to have been saying that it was a symmetrical triangle, and we're basically near the end. And since then, we've had this move, and it's a breakout to the upside. Now, you remember that I was saying that Volkovsky has made the pattern site, and he's made a list of all the different chart patterns and their failure rate. So this has a high failure rate, this particular pattern, and it's quite common to have breakouts that are essentially fake outs, so that they actually fail after the X number of periods, and you have a pullback or a throwback. So this is a throwback. So you basically have prices thrown back down to the breakout point. So the breakout point was here, 4135, and then we've gone all the way up to 4180, and we're back to exactly 135 more or less, and just rose a little bit to 148. So it's essentially a failed breakout. So I'm just going to delete it altogether because it's not really helpful. But it's just to show you what happens when a breakout has failed. This is the 1 hour. Obviously, if you went to the 4 hour, you'd see that it doesn't really amount to much. It's basically the post NFPs, non-farm payrolls breakout, and we're sort of candle-wise, we're just back below the basis for the Bollinger Bands, so the SMA, and that means that we don't really have a lot of room to go with this kind of price action. Nothing else has changed. I mean, we kind of chopped around after these three high highs and the price action on the CCI. We are on a CCI front. We are, as I said, kind of negative divergence seems to be the way to go, but price hasn't really listened to that yet. So we're kind of stuck, kind of waiting there. And we've looked at the daily chart as well. On the weekly, it would seem that we are here, just kind of slightly above the basis, but not by much. And if you remember, I changed this heavy black line as kind of resistance from the weekly here, because we're kind of broken above, to the monthly. And on the monthly, it looks like this, essentially. The line is kind of placed between the basis, so that's the orange line, and the weighted moving average. Okay, so that's kind of the spot for me that would say that we've maybe broken the market back upwards. So going back to where we are in a situation where we're just waiting. As somebody said on Twitter, there's absolutely nothing happening. It's like watching paint dry, which it kind of is. My two trades still the 0.1 and the 0.3 shorts at different levels, as you can see. Targets are diverse, but it's not really going to happen tomorrow. But if it did, amazing. If not, we have to wait obviously another couple of days. So thank you very much for listening. I'm sorry this is not a very conclusive video. In some ways we have a lot of room to go for resolution, but keep an eye on my channel. On Friday, hopefully end of this week, I'm going to do another video. I am on holiday at the moment, so sorry if there's no camera, but it's just obviously a bit tricky. But I decided to post a video anyway, just because it's it's what I like to do. Keep it regular Mondays and Fridays. So hope to see you on Friday. Take care and good luck trading out there.